Imagine earning just $1 a year. Sounds impossible? Not for some of the world's top CEOs. In an era where executive compensation often stretches into the millions, a handful of high-profile CEOs like Mark Zuckerberg of Facebook and Elon Musk of Tesla have set their official salaries at just $1. This intriguing practice isn't new and includes other notable figures such as Steve Jobs from Apple and Larry Ellison from Oracle. At first glance, it seems counterintuitive. Why would individuals whose talents command monumental market premiums choose to receive almost no direct compensation for their roles? This choice sparks a myriad of questions about their motivations. Are they making a statement? Is there a strategic benefit behind this modest pay? These leaders, often already wealthy from company shares or previous ventures, might not need the salary for personal expenses, but the symbolic $1 salary could be communicating something deeper about their leadership and vision. Now, why would billionaires like Zuckerberg and Musk opt for such a seemingly minuscule salary? Let's dive into the reasons. A dollar doesn't go far these days, so what's the real catch behind the $1 salary? It might seem like a puzzling choice for CEOs of major corporations to accept such a nominal amount as their annual pay. However, when we delve deeper, it becomes clear that this is merely a part of a much larger compensation strategy. Let's start with stock options, a prevalent form of compensation among these executives. Stock options grant the CEO the right to purchase company stock at a predetermined price, typically lower than the market value at the time of the grant. For instance, if a CEO is granted options to buy shares at $10 each and the stock rises to $50, the CEO can exercise those options and potentially gain a substantial profit. This aligns the CEO's financial interests with the company's performance, incentivizing them to boost the company's stock value. Moreover, these stock options can be staggeringly lucrative, often worth millions or even billions over time. They are designed to reward long-term performance and commitment, ensuring that the leaders have a vested interest in the company's success well into the future. In addition to stock options, many CEOs receive performance bonuses. These bonuses are typically tied to specific company metrics such as revenue growth, profitability, or market share expansion. Achieving or surpassing these targets can lead to bonuses that far exceed what one might consider a typical annual salary. Another key component of CEO compensation is the use of other perks such as private jet access, premium health insurance plans, and substantial retirement packages. These benefits, while less quantifiable in dollar terms, add significant value to the overall compensation package and are critical factors in attracting and retaining top executive talent. So it turns out, the $1 salary is just the tip of the iceberg, with real wealth coming from company stocks and performance bonuses. This clever structure not only benefits the CEOs, but also aligns their interests closely with the health and success of their companies, driving them to strive for greater heights. Cutting down your salary to $1 also comes with some intriguing tax benefits. Let's delve into the financial subtleties that make this move more than just a symbolic gesture. Firstly, by accepting a nominal salary of $1, these CEOs drastically reduce their taxable income. Normally, high salaries contribute significantly to personal income tax burdens. However, when a CEO opts for a $1 salary, their taxable income from salary drops to almost nothing. This shift can lead to substantial savings in income taxes. But the financial wizardry doesn't end there. The bulk of compensation for these $1-a-year CEOs often comes in the form of stock options and bonuses, which are taxed under different rules than regular income. Stock options, for example, are typically subject to capital gains tax instead of income tax. Capital gains tax rates can be significantly lower than the rates for income tax, particularly if the stocks are held long-term. Moreover, these stock options are not taxed at the time of issuance. Taxation occurs when the options are exercised and the stocks are sold, allowing CEOs to defer taxes and potentially benefit from lower tax rates in the future. This deferral can be a powerful tool in tax planning, providing flexibility in managing tax liabilities more effectively. Furthermore, the nature and timing of these stock-based compensations can be strategically planned to align with favorable tax conditions, optimizing the financial outcomes for these executives. Tax codes can offer pathways that favor stock-heavy compensation over high salaries. making $1 salaries financially strategic. In a world where CEO salaries are often criticized, a $1 salary can paint a different picture. When a CEO opts for a nominal salary of just $1, it's not just a financial decision, it's a statement. This approach can significantly enhance a CEO's image as a leader who prioritizes the welfare of the company over personal enrichment. It's a gesture that suggests dedication and sacrifice, qualities highly valued in leaders by the public and employees alike. Imagine the scenario. A company is navigating through tough economic waters or facing intense scrutiny over its performance. Here, the decision by a CEO to accept a minimal salary can turn into a masterstroke. It sends a clear message to stakeholders and the market that the leadership is not there to merely profit, but to steer the company through its challenges. The ripple effect? It often leads to a boost in employee morale as they perceive their leader as being in the trenches with them. Moreover, this symbolic dollar often aligns with the interests of shareholders, enhancing trust and potentially leading to greater investment. In the eyes of the public, a CEO taking home a symbolic salary might be seen as a hero of sorts, a leader who is more concerned with the company's future and the well-being of its workforce than with personal gain. This strategy isn't just about money, it's also a powerful tool for shaping public opinion and reinforcing commitment to company success. How does a CEO's $1 salary affect the company as a whole? In the grand scheme of things, a CEO's decision to accept a nominal salary of just $1 can ripple through the entire organization, influencing various facets of the business, from its financial health to its corporate culture. Firstly, this gesture can significantly boost the company's public image. Investors and potential talent often interpret a CEO's minimal salary as a testament to their commitment and confidence in the company's prospects. It's a powerful signal that the CEO is not merely in it for immediate financial gain, but is invested in the long-term success of the enterprise. As a result, this can attract investment from those who value leadership that is willing to align their personal gains with the company's performance. Furthermore, this move can also be a strategic play to enhance the company's appeal to top talent. In an era where corporate ethics and values are as scrutinized as financial performance, a leader's willingness to prioritize the company's growth over personal enrichment can make the company a more attractive place to work. This can draw in individuals who are not only skilled, but also share similar values of dedication and sacrifice, thereby strengthening the team. On a deeper level, a $1 salary can profoundly impact company culture. It sets a precedent of modesty and fiscal responsibility starting from the top. This can foster a workplace environment where resources are valued and wisely utilized, and where excessive spending is frowned upon. Employees, from executives to entry-level workers, may feel more motivated to contribute to a company that exemplifies such a strong commitment to its goals and principles. Moreover, this symbolic dollar can help maintain a focus on achieving performance-based rewards rather than guaranteed high salaries. This can encourage a more dynamic and performance-oriented work environment, aligning everyone's efforts towards collective success. In conclusion, a $1 salary does more than save money. It sends a potent message about leadership and priorities. It's not just a public relations move, it's a strategic decision that can shape the very foundation of a company's identity and operations, resonating with all stakeholders involved. So we've seen that the $1 salary is more than a simple headline. It's a multifaceted strategy that spans beyond mere pocket change. Executives like Zuckerberg and Musk may take a nominal dollar in salary, but their true compensation is layered richly with stock options and bonuses. These arrangements offer significant tax advantages and help shape the public's view of a CEO as a selfless leader, committed to the company's success. Moreover, this approach can deeply influence corporate culture and employee motivation. While it may start with $1, the true value of this salary strategy is measured in millions and much more.